I started investing, the same way everybody else does. You read the headline news and you chase after whatever it is. I remember this is, when I first started the Option Investment Club. I was on a trip to New York. I still vividly remember. And then there was one day the Dow Jones Industrial Average dropped by 30 points. You have to remember Dow Jones was like about a thousand points back then. So 30 points is like 3%. And it was like, wow, a really big deal. And then I panic and say, "Oh yeah, I have to get back to Cleveland, which is where I live." It just now you think about it, it was just ridiculous. You just have no experience in investment, and you're not protected. You're taking huge amount of risk. But anyway, what I'm trying to get to is, I think at heart, all investors initially are momentum chasers. They buy stocks when they are moving higher because they think it's going to go higher, and it's like a crowd mob theory, right? Everybody going this way. I need to join the mob, right? So I am not ashamed to admit that it's how I started investing, and that is how I invested through most of my life. And I am, even after I worked at hedge fund, and then came out and started my own portfolio. I was a momentum investor, and I'm not going to be ashamed to admit that. I had up, I have years I was up 70, 80% with documented history. But I also had years I was down 60, 70%, because I was chasing momentum. And that's how most people get killed. And so I evolved. I think, at least I learned to evolve. So I learned that, picking individual stocks is very hard. And yes, you can go after the momentum, but you always get killed with momentum because eventually they all crash. And are you going to be able to get out before the crash? Very difficult. So that's timing. And anybody tells you that they can use all these technical analysis, all these charts, and predict the future, either they're lying or they're delusional, right? So I don't think that works. So I evolve into that you should invest in the stock market by the way of holding ETF, and you should leverage it without borrowing money using the leverage ETF that's available on the market. And there are a lot of good reasons to hold these ETF, besides the fact that you cannot lose more money than what you put in. That's just a small plus, but the big plus is they reset every day. So they are only designed to follow the market, say double the return of the market on a daily basis. So what they do is they actually reset every day, and then they have to buy new instrument to emulate the performance. And that actually is a advantage to these products, because if you look at their historical performance, they return more than double or more than triple on they were supposed to return double the returns or triple the returns, but their returns were a whole lot more than what the market what they were designed to do, simply because they are resetted every day, and they get to be compounded every day. For example, if you hold a TQQQ from 16 years ago, I keep saying this, but you would have turned $1 into $160. If you have done the same with holding the one-time no leverage QQQ, you would have made from $1 to 20. You will turn $1 into $20, but this is a lot more than 3 times, right? 160 times is a lot more than, and then it's like 8 times of 20. So it has this mathematical advantage to it, that it resets every day. So back to the my evolution. So I learned to invest in the whole market, and I learned that I should take advantage of these highly leveraged products. And then I also learned that I really don't want to go through these 100% up year and then down 80% in 1 year. It's just too much up and down, which we call in the business, we call it volatility. We really don't want this volatility in my life. I want to be able to sleep, especially I'm in Asia and the US market is open till 4 a.m. my time. I really don't want to stay up till 4 a.m. and worry about the market, right? So what I'm doing now is I buy insurance. I buy a lot of insurance. I buy so much insurance that it's unreasonable to any reasonable person. And that is the magic of the portfolio. Because by overbuying insurance, that means if the market goes down, I would actually also make money. But here comes the real motivation why I'm doing this channel. The real motivation is it is so expensive to buy these insurance. And there are weeks or months that these insurance money just get thrown into the water. And without this channel, I probably won't have the discipline to continue. But with this, with this, I have to put my portfolio out there and continue to show it on a weekly basis. Then I have to execute according to the strategy. And this will help me to stay on course and to execute the strategy. I don't want to brag, but I think I am very confident, actually, that this strategy will outperform the market by a lot. But we'll see. We'll see. I'm pretty sure you will be pleasantly surprised by the performance over time.